Going on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you guys are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week. We break down some of the analysis we have performed to give you a better understanding on how we are looking at tackling them. Now, if you do go on to enjoy this video, don't forget to leave it a thumbs up. And if you have any questions or queries with regards to the analysis I go through today, then just leave them down in the comments below. Now, the first pair I'm going to touch base on in today's video is the Euro US dollar market. And you can see here that looking on the 4-hour time frames, this market is quite evidently bullish. I expect this bullishness to continue. Now, obviously, before we look to take this market long, we need to allow price to correct itself down and into an area of interest, allowing us to obviously get involved in this market with a more refined entry. The more refined an entry, the better the returns on the position. We could obviously look to go long from here with the expectation that price is going to continue trading higher, but our stop loss would have to be set at the last protected low, which would be this one here. Why is this the last protected low? Because this low went on to set the highest high. Now, if we allow price to trade down and into an area of interest, an area of demand, and we wait for confirmation that the corrective wave has finished and the new impulsive wave is ready to take place, we are then able to really refine our entry and ultimately have better odds on the position. So I want to see price trade down and into this area of demand. What we'll expect is for an accumulation to take place, and this is basically short orders being removed from the market. So anyone that's shorted from these highs here to close those short orders, and for those who are wanting to buy into the market to introduce those buy orders, and as a result we have a flip in the balance. Supply is being removed, demand is being introduced. Now we'll have confirmation of this accumulation and ultimately the next impulsive wave once we have a fractal break of structure in and around this area of demand here. So we can expect price to trade down. We then want to see demand being introduced for that to push price to the upside, breaking the last protected high within the bearish correction. Price will then pull back. This is where we would enter, and then we drive price higher. So that is what we would look for in terms of a setup on a trade and the confirmation we need in order to execute a position. And that's what I'll be doing this coming week. Be sitting on my hands, waiting patiently for price to trade into an area of interest, for price to deliver me with the confirmation I need, and then I'll be looking to execute my positions. But as I say, this is predominantly a bullish market. We are simply taking advantage of the overall bias of this market. So that's my analysis for the Euro US dollar. Heading over to the Great British Pound to the Japanese yen, we can see here that we have a very similar situation. So price has recently broken structure to the upside after trading down and into a higher time frame demand zone. So what this tells us is that enough demand has been introduced here to flip the S&D balance, because we are now in favor of bullishness, with us creating higher highs and higher lows. Breaking the last high here to create a new higher high suggests that bullish structure. So what can we expect from this price? Well, now that price has set a higher high, we can expect the price to pull back to set a higher low before going on to set a new higher high. Again, following the laws of bullish structure. So we are still seeing price respect areas of demand, but you can see that the volume that's being introduced in terms of the demand is slowing down, and we are starting to see this market range. This is when we'll begin to see what we call a distribution, and this is when supply is introduced from these highs here. Demand is obviously offloaded from here, which encourages price to trade down. What happens when price trades down and into this area of demand? Well, demand is introduced, that pushes price up, and to back that, all of these sell orders that were introduced from this area of liquidity will be removed from the market. People will be taking profit on that, and as a result, we have a full S&D flip. So I will be waiting again for price to trade down and into this area of demand before I look to take part in any buy positions in this market. It's important that we trade with the prevailing trend and the overall bias of the market just to give us the highest probability of being successful. As we know, the Great British Pound to the Japanese yen is very much a bullish market, with the Great British Pound being a major currency and the Japanese yen being somewhat of a weak currency. Now, can we look to take part in short positions to drive price lower? We can. But as I say, it comes with risk, and we need to be very careful and cautious when placing these trades, as we are actually going against the overall bias of the market. Yes, we are taking advantage of what would be a corrective wave, but as we know, this still holds risk. But that again is my analysis for the Great British Pound to the Japanese Yen pair. Moving over to the Great British Pound to the US dollar. This is a market that we took advantage of last week. We actually got involved in some long positions from here. So we waited for price to actually break through this area of supply. Price broke through. That told me and confirmed to me that actually the demand in the market is still outweighing the supply, and we should look to continue to trade this price long. So what I did is I waited for price to pull back into an area of interest. Price actually came to trade down, if we don't refine it too much, into this hidden order block here. So the wick to the upside followed by the wick to the downside. Price traded perfectly into this. We got introduced and ultimately profited from this market. Now, how can we look to take part in the coming week? Well, we simply do the same thing. We wait for price to pull back down into another area of interest, and we continue to trade price higher. I gave this area here as an opportunity for my clients over in the VIP chat. Price did come down to trade down and into this area of interest. I think we go down to the 1 hours. We can see it a little bit more clearly. We have the wick to the upside followed by the wick to the downside. Price came to trade down and into this. There's clearly a lot of liquidity here. That was cleared. Price pushed up, creating a new higher high. So now in the coming week, do we have areas of interest that we can look to take advantage of? Well, there was also this one here for those who missed the original move here. Again, a wick to the upside followed by a wick to the downside. Price came to pull back down into that before this push higher. So if we go down to the 30 minutes, what we need to do is we need to look for clear relevant areas. From what I can see here, there is one, but it's on the 15-minute time frames. And as we know, the lower the time frames we go, the less respected these areas are, because there is less volume, less liquidity, less supply and demand being held at these areas. But there is a wick to the upside followed by a wick to the downside, which represents a hidden order block. So it'd be nice to see price pull back down and into this to give us that entry before we take price higher. I'm just going to move our alert a little bit higher just so we are notified. A trade may look something like this. I'd probably set my take profit just to be safe below the last low here, and then we could set our take profit at our original take profit target, which is here. And as you can see, we walk away with a lovely 1-to-6 risk to reward ratio. So again, this week it's just a case of waiting patiently now for price to play into our hands, deliver us with the confirmation we need in order to take part in this market. A lot of Forex is based on being patient and waiting for price to play out. People tend to lose often in these Forex markets based on fear and greed, the fear of missing out or the greed of wanting more from a market. So it's very important that we wait for our confirmation parameters to be met before we take place in the market. And if an opportunity is missed for any reason, not to worry. There are hundreds of markets that we can analyze and trade, and the markets are open 24 hours a day, 5 days a week. Now, that is going to summarize this Sunday sessions video. I know I've only gone over 3 markets. These are the only 3 markets that I'm really trading at the moment and that are really giving me the structure and setups I am wanting. If there are any pairs that you want me to analyze and go over, leave them down in the comments below. And if you aren't involved in our VIP chat or the Learning Lounge, head down to the link in the description and get yourself involved. I do supply further analysis on some other pairs over in the Learning Lounge group chat. Now, as I said at the start of the video, if you have enjoyed today's video, don't forget to leave it a thumbs up. And if you have any questions or queries, leave them down in the comments below. But I just want to wish you all a very profitable week. Thank you very much for watching, and I'll catch you all in the next Sunday sessions video.